In this video, we're going to discuss equivalent units of production, what they are, why we need them, and some basics on how we calculate them. But to begin with, let's look at some of the similarities we have between a job order costing system and a process costing system. In both a job order and a process costing system, we have direct materials, direct labor, and manufacturing overhead. These costs flow into a work in process account. Then when goods are finished, they move to finished goods, and eventually they are sold to customers, and the cost is transferred to cost of goods sold and matched with revenues. In a job order system, the costs are traced or tracked fairly easily. We record job cost on job cost sheets, and as the jobs move from work in process to finished goods, we transfer costs from work in process to finished goods. Then when the jobs are shipped to customers, we transfer the cost from finished goods to cost of goods sold. But again, we maintain job cost sheets in which we record directly the direct material and direct labor costs on any job and our applied manufacturing overhead. A process costing system, on the other hand, we trace costs directly to work in process and apply overhead to work in process, or we might again trace costs to work in process departments if we have a sequential production process. But we'll need to find a way to allocate or assign costs to individual units of production. So again, the cost flows in a job order system are from work in process for individual jobs. The jobs are transferred to finished goods, as are the costs, and the jobs and the costs then are moved over to cost of goods sold. If we need to calculate a cost per unit, we would simply take the total job cost and divide it by the total units in a particular job. In a process costing environment where we have continuous production of a homogeneous product, our product will move, say, from Department A to Department B to perhaps a Department C, but eventually it'll move to finished goods and then on to cost of goods sold. And because we're producing a homogeneous product, we will calculate an average cost per unit by simply taking our total costs and dividing it by the number of units we've produced. Or at least that's almost what we do. The difficulty comes in with the fact that during our production process, at any point in time, we're likely to have some partially completed units of production. We'll have some units that we have just started, we'll have some units that are halfway complete, and we'll also have units that are nearly finished. Of course, any fully completed units will have been transferred on to the next department or to finished goods. But because we have some partially completed units, we need to concern ourselves with what we call equivalent units of production. Equivalent units are the product of the number of partially completed units and the percentage of completion of those units. That is, if we have two products that are halfway complete, it's equivalent to one fully completed product. Or say we have 10,000 units that are 70% complete, that would be equivalent to 70,000, or rather 7,000 equivalent units of production. Which means that rather than calculating an average cost per unit, which would have been our cost for the period divided by the number of units we produced during the period, we will need to calculate an equivalent cost per unit, where we take the costs for the period and divide them by the equivalent units of production for the period. Again, rather than calculating an average cost per unit, which would be the cost divided by number of units, we recognize that all units are not at the same stage of completion. So instead, we calculate a cost per equivalent unit. Let's go ahead and take a look at an example. For the current period, Jones has started 15,000 units and completed 10,000 units, leaving 5,000 units in process at the end of the period. These 5,000 units are 30% complete. So the question is, how many equivalent units of production does Jones have for the period? Go ahead and pause the video and consider this problem for a minute. The answer is B, 11,500 equivalent units. Any units that were transferred out to the next department are by definition 100% complete. And then of course the remaining 5,000 units we're told are 30% complete. So they're equivalent to 15 or 1,500 equivalent units. So in total, we have 11,500 equivalent units of production during the period. Equivalent units can be calculated two ways. The first way is the first in, first out method, or FIFO method, and that's covered in the appendix of your text, and it's available also in the web. But we're going to focus primarily on the second method, which is the weighted average method. Under the weighted average method, we will combine or blend together all units of production. We'll take a look at an example in a few minutes. But first, let's consider another twist to our calculation of equivalent units of production. Quite often in our production process, we'll have an uneven application of cost. In other words, we'll have unequal amounts of direct labor, materials, and manufacturing overhead, and these costs will be incurred at different points in time during the production process. Because of this, we will often separate out and do separate calculations of equivalent units for direct labor, direct materials, and manufacturing overhead. But because direct labor costs are often small in comparison to other product costs in most process costing systems, recall that processing costing systems are generally automated, we will often combine direct labor with manufacturing overhead, and the two costs combined, recall, then are referred to as conversion costs. Let's go ahead and take a look at an example where direct materials and our conversion costs are added to our production process at different rates, and where we've combined both direct labor and manufacturing overhead in one group and referred to them as conversion costs. The Smith Company has reported the following activity for the assembly department for the month of June, and we're going to prepare this calculate our equivalent units of production using the weighted average method. In most of the problems in Connect, they will give you a stage of completion for our beginning work in process and a stage of completion for ending work in process. When we use the weighted average method, we can ignore the stage of completion of beginning work in process. That is, we will ignore the 40 and the 20%. We will focus on the 5,400 units we've transferred out and the 900 units in ending work in process, and the fact that they are 60% complete with respect to direct materials and 30% complete with respect to conversion costs. Let's go ahead and take a look at the first step when we look at the 5,400 units that are transferred out. Of course, any units that are transferred out to the next department or to finished goods must be, by definition, 100% complete. So the 5,400 units will be 100% complete with respect to both materials and conversion costs. We're told that the 900 units that were left in work in process at the end of the month were 60% complete with respect to direct materials. So 60% times 900 gives us 540 equivalent units in ending work in process. We were also told the 900 units were 30% complete with respect to conversion costs. So 30% times 900 gives us 270 equivalent units for conversion costs. Thus, our total equivalent units for direct materials are the 5,400 units transferred out, the 540 units left in ending work in process, for a total of 5,940 equivalent units. For conversion costs, we take the 5,400 units that were transferred out, plus the 270 equivalent units in ending work in process, for a total of 5,670 equivalent units. Our equivalent units of production will always equal the units completed and transferred out, plus the equivalent units remaining in ending work in process.